Hello traders and welcome to ChrisFX. Today I will show you how to identify false market structure shifts and enter only high probability trades. Number 1. A high probability market structure shift must happen in a POI, which stands for a point of interest. So such point of interest can be an order block or can be a fair value gap. In this occasion, right here, you see that we had this reaction from a fair value gap of the 1 hour time frame. Now, let's move on to number 2. Number 2, liquidity needs to be grabbed. As in this example that you see right here, that we reacted from this fair value gap of the 1 hour time frame, liquidity was run below these areas right here. So when we reached in our area, we had already grabbed a bunch of liquidity from those support and resistance traders who went long over here, and then they went long over here, then over here with a small reaction. We grabbed the liquidity and then we broke impulsively towards the upside, and this brings us to the third point, the third rule, which is that we need an impulsive break of structure. If there is no impulsive break of structure, then there is no trade. In any occasion, let's take again this example right here, the first one, and then we're gonna move to the second one. Here we had this imbalance, this fair value gap from the 1 hour time frame. Compare how price reacted from this fair value gap right here, where we did not break any structure and price was not moving impulsively at all, and compare it to the reaction from this fair value gap right here, where we broke very impulsively above this previous area. So here we do have indeed an impulsive break of structure. Look at the candlesticks now. It's not just that we broke above this area with this candlestick, but look how many bullish and how many strong bullish candlesticks followed after this one, and see the fact that we also broke many structures right here. How can you trade these occasions when we have a reaction from an area such as this one? You can expect for price to react again from an area such as this one, as it did right here. If we take this 1 hour order block, you will see that we reacted perfectly from this area. How do we trade now inside these areas? We have numerous ways of trading inside these areas, but we have to follow the same exact rules inside our area as well. Now I am inside the area and I am on the 3-minute time frame. Let's be totally realistic as we are here on ChrisFX. When you see this liquidity being grabbed and then we are breaking impulsively above this area right here, then of course this qualifies as a valid change of character. We can indeed clearly say that here you would have had your first loss. Let's be absolutely honest and let's not bullshit each other. This would have been, at least it would have been my first loss. I wouldn't be able to predict that. I'm not a magician because it follows the rules. Nonetheless, a little bit later on, let's say that we had this first loss. Okay, what did we see? We did grab even more liquidity, which was below this area right here. And what did we see afterwards? The same rule, we broke impulsively above this area. So we have this fair value gap, which is this one right here. We could go ahead and place our order right here, and we could target this one as a first target where we could close 70% and then go for second targets here, or as I have said at the beginning of this order block, because many times price is gonna test that and then it's gonna retrace. Let's see how price played out then. There you go, we are into the trade. I will scale up to the 15-minute time frame. First partial is closed right there, and second profit is closed right here, let's say. Even though many times, as I have said, I would close the second one right here, this is also absolutely valid. Then price makes it even higher, we cannot know that. It even grabbed the liquidity above this area, but this is up to you to find out your targets. Okay, and then let's move forward. I will scale up to the 1 hour time frame as well. Let me go ahead and delete those right now, and we will see how we can identify new grabs of liquidity within the same movement. Now, if I proceed even more, you will see what I'm talking about. There you go. This is a very, very clear grab of liquidity. Okay, look how price reacted after this grab of liquidity right here. I am still on the 1 hour time frame. If it did grab it, I'm not quite sure. We don't care, I'm not gonna check it out because we do not have an appropriate impulsive movement right here. But when we left this week, we did have an impulsive movement with a change of character. Again, where did all these things happen? These things happened in a significant area. If I go down to the 15-minute time frame, when you see such reactions, you can question yourself, or let's go to the 4 hour time frame to find whether price is reacting from a significant area. So one trick that you can follow, you can first see the reaction and the impulsive movement if you have not drawn all of your areas, and then question yourself, did this reaction happen from a significant point of interest? In this occasion, this is a significant point of interest, this fair value gap on the 4 hour time frame. I scale down to the 15-minute time frame right now, and I will delete all of those drawings right here. And it does bring us to the present. I will just move forward to the present. I will just exit actually the replay mode. We see that we did have a first reaction from this fair value gap right here. I am still expecting in this occasion for price to come back in a discount because of the fact that we have our 2 rules fulfilled already. Look at that, actually the 3 rules fulfilled must happen, the reaction must happen in a point of interest, which is the 4 hour imbalance, the 4 hour fair value gap. Then liquidity needs to be grabbed. Liquidity was grabbed significantly, and then we have an impulsive break of structure, which happened exactly right here actually, but even more confirmation for us right here. We did miss the initial entry because price did not come back to retest our point of interest on the 1 minute time frame. Then it made this whole movement. Now I'm waiting for it to come back and retest one of these fair value gaps or even this order block down here, and then I will check out for a trade. So in order to sum things up, if you follow those 3 rules, so if your reaction happens in a significant point of interest, if there is liquidity which is being grabbed, and if you have an impulsive break of structure and change of character, then you are way safer to enter a trade compared to when you haven't checked those 3 boxes. If you liked this video and if you learned something, please leave me a like and subscribe to my YouTube channel for more. Furthermore, leave a comment with your like because I will include you in the giveaway where 2 out of the first 100 people are going to get my courses absolutely for free. And furthermore, you can join my Telegram channel by clicking on the link in the description where I'm calling every single trade. This is gonna do it for today, traders, and thank you all for watching. Until next time.